ready to purchase your home, you're just not sure how to go about it. Are you in the diaspora and you want to find out how to acquire a home here in Ghana? You're trying to get the process started, you're trying to explore your financial options. Are you under the impression that the mortgage process is a long, gruesome process, customer service is not so great? If you answered yes to all these questions, then you're in the right place at the right time. I just want to say thank you so much for joining us live today. My name is Sandra, and I am a manager with IndigoHomes. Now, IndigoHomes is a leading real estate developer in Ghana. We have a presence in Kenya, a presence in Tanzania, and we are an endeavor of Black Ivy. Black Ivy is a values-driven company backed by US investors, and we have multiple enterprises in sub-Saharan Africa, growing and building Africa in many ways. So please, you can, if you're interested in what I'm saying, please log on to you're on our platforms right now, explore, we have a lot of information. We also have our website, which is www.indigohomes.com. So yes, like I said, we're in Ghana developing homes. We have an inaugural development called IndigoHomes, which we are very successful with. We built 200 townhomes and sold out. We have families that have moved in. And we're now on the second project. But we'll get a little bit deeper into all of those things. But I am so excited today to be joined by Mr. Kojo Ado Kufuor. Did I get that right?
You did get it right, yes.
Wonderful. All right, so I will let you introduce yourself. And now I know we partnered with the right person because after reading your profile and just, diving deeper into all your expertise, I know you're the perfect person to answer all these questions that we may get from all over the world, wherever you're tuned in from. So if you don't mind introducing yourself, I'm sure our viewers would love to hear about, a bit more about yourself.
Right, thanks. So my name is Kojo Ado Kufuor. I'm the executive head of home loans business at First National Bank, Ghana.
Great. Okay, so a little bit more. How many years have you been in the industry? I read a lot. You have experience from all over the world.
Yes, actually, my original background was in science. I did a degree in engineering, then computing science, but then I went to business school and then headed off in the world of finance, and that took me first to the US, Australia, Indonesia, back to London, and more recently in Lagos. That was 2003,
yeah, I think I read about that.
Yes, exactly. And then came to Ghana, and we started what was then Ghana Home Loans in 2006, and that went from 2006 to 2017, and then we converted to become a bank, GHL Bank, and that went from 2017 to 2020, when my partners and I sold to First National Bank.
So, sorry to interrupt,
yes.
But just before I forget this point,
yes.
You are a co-founder of Ghana Home Loans?
Yeah, absolutely, yeah.
So for those of you who don't know, Ghana Home Loans has been there for a lot of people who were exploring the mortgage options. So they were one of the people who started way back. And yeah. I think, after you continue your profile, that will lead me into my first question. But anyway, you can continue.
Right, so Ghana Home Loans became GHL Bank, and in 2020 became First National, where we merged with First National, and we've been First National since 2020. But I run the mortgage business within First National. Yeah.
Great. Thank you so much for your introduction. All right, so let's dive right into it. With everything that's happening in the economy and with the dollar rate and all of those things, we just felt like this would be the perfect opportunity to really just collaborate and get together and answer all the questions that, our viewers have, not just our viewers, but a lot of people, from all over the world who are into investment properties and just really want to explore, how to go about, purchasing a home, how feasible is it? Is it, is it so far-fetched? So we're here to just really address all of those things. Here at IndigoHomes, we do not call ourselves sales agents and just pushing homes, but we call ourselves more financial advisors. So we actually want to get to know the customer's needs and actually, address all of those things. And we're with you on the journey. So, all right, let's talk a little bit about the economy and what's happening out there, and just how the real estate market has grown, especially in Ghana, what you've seen over the years, and how it is now.
So if you take it back to 2005, 2006, when Ghana Home Loans was launched, the developer market, the IndigoHomes at the time, would have focused more on the expats, the non-resident Ghanaians. The sense was that there was no local mortgage business to allow the acquisition of property by resident Ghanaians. So they built for the non-residents. And that influenced the type of properties they built and the price points they came out with. But once Ghana Home Loans came on the scene, it became more and more affordable and possible for the resident Ghanaians to acquire properties. And since then, we've seen an explosion in the type of units, more affordable, so it's relative, but relative to what we were doing then, definitely more affordable. Property prices have come all the way from mid-200s at the time to a lot more in the 60, 70 range, up into the 100s. So there's a much broader offering than it was at the time. There's been a lot of new entrants to the market. Back then, there were a few majors, but now there are a lot more smaller operators. The industry is definitely more fragmented. Right. The types of properties, I mean, the quality has improved to a large extent, even though there are one or two problem kids in there. But generally, people are now much more aware of what to look for when they are buying. It's also possible for people to build. So we've seen a lot more people taking home construction loans from us to build. But right across, the market has evolved. That is what we've seen. There are a lot more mortgage operators in the market as well. Yeah, Back then, it was us and to a lesser extent at the time, HFC, which is now Republic. But now there are a lot more operators. So right across the board, the industry has grown. And often when people compare Ghana to UK and US, what they forget is those markets have been around for decades, if not hundreds of years. So we're on our journey, but it's definitely in the right direction.
That's right. So now that you've said that, you've brought in the US market and the market in UK, and so just talking a little bit more about the Ghana market.
Yes.
Okay, so we all were here during COVID times, and a lot of different economies experienced a lot of different things. So from your experience and what the bank dealt with, what can you tell us about your experience and how everything was over COVID and now? What have you seen?
Right, so first off, what the benchmark ratio in terms of number of units built by developers and those that are financed by mortgages has always been around 80-20. So if a builder rolls out 100 units, invariably 80 are cash buys and around about 20-30% would be financed by mortgages. So by far and away, most buyers pay cash. We've really struggled with that ratio, but made a bit of progress. We haven't made as much progress as we would like. So we are still up against cash buyers as competition. What happened, what we observed during the COVID period was, initially people were apprehensive. I mean, COVID took everybody by surprise. Nobody saw it coming. But as the pandemic raged on, people came to terms with their mortality.
That's right.
People realized that we're not here forever. So whatever you want to do, you have to do it quickly. So we saw an uptick in activity. People who had been sitting on the fence decided, right, if I'm going to do it, I might as well do it now because nobody knows tomorrow. All of that kind of thinking came in. And so there was a lot more activity than the previous years. But we saw that activity was more towards the cash buyers. If you have 100,000 cedis in some account somewhere, why leave it there? Who knows tomorrow? Take it out, buy something. So to the extent that financing was required, they came to us. Otherwise, people, we saw a lot of activities from our developer partners, and we're very happy to see that. Because even if we don't get the first transaction, which is the purchase, we can always get the equity release or secondary market transactions. So we saw that, we definitely saw a marked change there.
Great. All right, so thank you so much for that. All right, so just talking about, you spoke a lot about, you've seen a lot of people, doing more of the cash option. What other options are available for people as they look into purchasing homes? What do you offer your clients?
Well, I think, I always say that the number one offering we have is advice. Yes, we give money. I mean, that's what we are a bank, we give money. But right from Ghana Home Loans days, we've always prided ourselves in our knowledge of the market. Where to go, where not to go, what to look out for. We have a very formidable team back at the head office that can look at an indenture and tell you exactly what's wrong with it.
Exactly.
And that's something the cash buyers often miss out on. When you're using your own money it's very easy just to write a check and get on with it. But when you have another pair of eyes looking at the transaction, they can tell you there's a problem here. Even if you buy this property, you can't transfer it into your name. Even if you build it, you won't get building permits. So there are things which we bring to the transaction that I think you miss out on if you're using your own cash. I mean, if you have your own cash, by all means use it, but I always recommend that even if you can fund it, don't do the 100%. You can do 80 and borrow the remaining 20.
Okay.
Because we can come along and for that 20%, tell you exactly where the gaps are. And we go even one step further. We register the property for you, post disbursement. So you're looking to buy an Indigo home. You've chosen this particular one we are sitting in. We will help you with the financing. Well, first we check out the title. Then we help you with the financing. And then we take the documents and take them through Lands Commission to make sure title is transferred into your name as the buyer.
Sure.
And that's the real value add. Yeah.
Good, I like that. I think you said something and it struck me, and I think that's like one of the synergies with why we actually decided to collaborate is that you guys are advisors. Yeah. You're not just there to take on the client's business, but you're there to actually point them out in the right direction, and we are actually doing the same, so we offer our clients various options of how to purchase for an Indigo Homes property. We offer discounts for cash upfront, like you mentioned. That's an option that is quite, common. And then we offer installment payment plans. And then we also have the mortgage options as well. Yeah. All right, great. So now speaking on mortgage, and I'm also going to get a little bit personal in this discussion. Yeah. What kind of mortgages do you offer?
So we offer the full spectrum. We offer the purchase mortgage, which allows you to buy a property. We offer land purchase for those who insist on buying land. If you buy the land, we offer the construction mortgage, which allows you to build on the land. Sure. We offer equity release after you've built or bought the property. If you want to release equity out of it, we offer that. If you don't have down payment towards the purchase, we offer the 100% mortgage.
Okay.
So we offer the full spectrum. If you're building, you've gone halfway, you're stuck, we help you complete. So if it can be done within reason, we can get you the property.
That's very exciting, 100%.
Yes.
Okay. All right. So like I told you, I'm going to get a little bit, more personal in the mortgage process. So for somebody like me, I'm not Ghanaian, but I'm living in Ghana. I'm really interested in purchasing homes and, investing in property. How does somebody like myself qualify for mortgage? What are some of the things that you look for? So not just talking about like a foreign, a foreigner, a foreign investor, but we'll also delve into just like the basic qualifications and the things that you look for.
Yeah. So there are certain requirements that cut across. The two parameters that normally kill an application. One is insufficient income.
Sure.
Or lack of verifiable income. And the other is title that has issues. So if we do a search and we detect that there's litigation on the land or there's some situation going on, that right there and then the conversation stops. Otherwise, we would ask you for the usual stuff, proof of ID, proof of income, which is the salaries. We ask you for proof of address where you live. Yes. It's kind of straightforward. We run a credit check on you to see what you've borrowed in the past and how you behave to other lenders.
Sure. So, in Ghana, how do you check for?
There are credit bureaus.
Okay.
Yeah, there are credit bureaus. We run there, and so
there are credit bureaus in Ghana.
Yes, there are a couple of them.
They can pull credit history.
Yeah, we do pull, and it's always a pleasant or sometimes unpleasant surprise to people when you run a check and we tell you 10 years ago you took a loan from Bank X, and they are still waiting for their payment, and we hope that's not how you're going to treat us. And credit committee frowns upon such behavior. So we normally advise people to check their credit and straighten out their history before they proceed. So we pull credit. And if you are offshore, again, we ask you to run credit, send it down, and we check. So credit is very important. And
so you are asking them to pull their credit histories from abroad and share them as one of the requirements.
Yeah, because we know what we are looking for.
Sure.
So, and we try to reconcile that with other information we have.
Yeah.
So we have proof of ID, proof of income, proof of address, credit, bank statements, to see the activity in your current bank accounts. You don't have to be an account holder at FMB when you start.
Okay.
But by the time you're done, you will be.
Okay.
You have to be.
You get us somehow.
Yeah. So it's part of the equation. You have to be an account holder. So we go through that, and then the conversation starts. So we run the analysis, and if, say, in your case, resident non-Ghanaian,
Sure.
the question that will come up will be, well, how long are you going to be here for? Are you going to buy this house today and disappear tomorrow? And besides, if you're working here, what work authorization do you have to
Sure.
work here? Is your employer going to throw you out tomorrow? So we check out some of these things.
Okay.
And depending on the profile of the person, all kinds of questions do come up. So, for example, we do joint applications.
Okay.
Husband and wife, for example. So if you present yourself as a husband and wife, a couple, and the surnames aren't the same,
Yes.
we might ask for a bit of clarification.
Okay.
You know, we are old-fashioned like that. No, so we need to understand how you are a couple, right?
Sure.
So depending on the situation of the client, different sets of questions arise, and depending on the answers that are given, more questions might arise.
Sure.
And that's why people say, "Oh, the thing takes such a long time." It doesn't. It's the questions you give.
Sure.
That generates the answers, so the answers you give generates further questions.
Sure.
So we go through that whole process, and then at the end, for over 90% of the cases, we get green light and an amount is recommended for the loan.
Okay, so about 90%.
Yeah, more than. Once we start the process, it
Yes.
means you have a very good chance of going through.
Okay.
Because normally we check before we start. So if we start, it means on the face of it, we are okay. So then attention shifts to the property. We do credit search, property search on the property. We survey, we do a check at survey, we do a check at Lands Commission, PVLMD, the various
Sure.
agencies of Lands Commission. And if we are happy there, then we proceed to conclude the transaction and disburse.
Okay.
So it's quite an elaborate process.
That's right.
We are looking at you, we are looking at the property. In some cases, we might even turn our attention to the vendor, because we might be looking at the vendor, looking at the property, saying, we are not quite comfortable. Are you sure this is the vendor? We see a different name here, or we're not quite sure about where the line of ownership. So that could also drag things out a bit. But generally, it's a straightforward process.
That's what you say?
That's
okay.
a fact.
All right, so let's talk a little bit more about the lengthy. Okay, so a lot of people are under the impression that, you know, the mortgage process is lengthy, is gruesome, and in Ghanaian slang is long, you know. So we get that a lot. But then after you've explained all of these things, it just shows that you guys you make sure all the boxes are checked.
Yeah, and if I may just clarify, you see, when you are in more mature economies, if you're in Europe, if you're in the US, if you're in South Africa, Australia, places where they've done this for a long time, if I'm buying your property, I have a solicitor, you have a solicitor. So it becomes a solicitor to solicitor conversation.
Sure.
So you are happy down at the pub drinking your beer, solicitors are doing the work.
Right.
In our environment, it's you and the bank. So we are having conversations that normally solicitors would have.
I see.
So sometimes documents are provided which the person providing them clearly hasn't read them. Otherwise, they would have spotted the errors. Sometimes we ask for things which people don't understand and they won't see clarification. So all kinds of things come up which drag the conversation unnecessarily. But in other places, because solicitors will be running things, it's unlikely those errors will be met in the first place.
Sure.
Yeah.
All right. Okay, so let me give you another scenario here. So someone in the UK, a Ghanaian in the UK, is really interested. They found a property at IndigoHomes that they really love.
Absolutely.
We've given them a sales and purchase agreement. They've found their unit. They, from us, they can afford. They're going for a mortgage. Yeah. Now, you said one of the things, of course, is proof of identity. So what do you look at? What do you accept?
Well, proof of ID tends to be a national ID, passport, whatever is accepted in that geography that we can verify.
Sure.
So normally it's a passport, that's good enough. Or if there's any additional proof of identity, a national ID, not a gym membership card or something that's nationally accepted in wherever they are, we take that.
Good. Okay, so they've come to us, they've located a unit that they like and, identified the purchase price. Now, how can that person self-qualify themselves? to really get a good understanding of how their repayment will be, and what the bank is going to look for, especially when it comes, let's get a little bit more detailed into some of the things you actually look at. I know you pull their credit history for their trends in how they spend, but what are some of the other things for somebody to self-qualify themselves before they come and look at the mortgage option?
So we make it even easier than that. We have a team of salespeople and business analysts who, if you engage us, will work with you to establish how much you qualify for. Because what we found earlier on was that people disqualify themselves.
Okay.
So they might work as a teacher at some school, and then they have a side business where they run a minicab or something. They might think that additional income is not admissible.
That's right.
Maybe it is. They can't make that judgment. Our guys can. So we
Great.
ask them, present everything you have. We'll run it through our first set of analysis, and we'll tell you where we think it's going. So instead of you sitting at home kind of beating yourself up trying to figure out the numbers, you engage. They ask you to bring the documents, they assess them, and they'll tell you exactly where the chances of success. And that makes the conversation a lot more reliable.
Sure.
Because that's one. And secondly, people might tend to forget other additional sources of income they have. How do you treat commissions? How do you treat bonuses?
That's a good one. Yeah.
How do you treat additional overtime? And there are rules around that. So our guys will run those numbers and tell you. The other bit people tend to forget is how much they owe elsewhere. And how do you treat that? Yes, exactly. You earn $1,000 a month, but your credit card says you have $5,000 on it. How do you treat that commitment? Our guys will tell you that. So I often recommend that people should just engage and go through the process and get a fair idea. And if they're interested, we go from there to full credit. It's only when you've gone through full credit that you get a binding offer.
Great. Yeah. Okay, that really clarifies a lot. I didn't know you look at commissions and bonuses and all that, so I think this is very, very enlightful.
And rental income, for example, if you demonstrate that you own property and you have rental income and it's verifiable, depending on what you present, you might get credit for it. So it's a whole series of analysis that is done by various people on our side to come to some conclusion. Sure. So it's easier for you to present all the information. The more you show, the more you get, right? So it doesn't help to show us one payslip and not another. It doesn't help to show us the payslip for one job and not for the other. You give us full information, and then we take it from there.
That's good. I really like that you've shed a lot of light, that your team is really on board to just walk the customer through. And I'd like to add that our team is also equipped to pre-qualify. We've met with your team and we've educated ourselves. So we're actually here to make sure we're partners and we advise accordingly. We're just not trying to make a sale, but we're trying to make sure it's the right sale. All right, so let's actually talk about how long on average does the mortgage process take?
That's another difficult question.
Exactly. Like you said, I'm sure it depends on how responsive.
Normally it takes as long as it takes.
Okay.
We like to, so there are two parts to it, as I explained. The credit piece and then the property due diligence piece. So the credit piece, if the individual is a salaried applicant and they come with a full pack, usually within 2 to 3 weeks we have an answer. There might be a bit of back and forth, asking questions, clarifications, but if it's straightforward, within 2 to 3 weeks.
2 to 3 weeks.
We have an answer, generally.
Okay.
But you find normally people give you pay slips where the amount on one pay slip is different from the amount on the other. Okay. And it's different from the bank statement. And obviously, the question then is what's happening here? We need to clarify.
Sure.
So that's normally straightforward. Then the question is, due diligence on the property, how long does that take?
Right.
We send out for the searches, and that could take, again, as long as it takes.
That's right.
But normally we expect it to have an idea within a month or so.
Okay.
And assuming everything checks out there, then we are good to go. If there are issues on the search results, we come back to the vendor to try to straighten out the issues that have been raised. Okay. So the question, how long does it take going in? It's hard to say.
Sure.
If you're buying from IndigoHomes and we've done 2 or 3 transactions on the same site, we kind of have an idea what the search results will throw up. Even though from time to time, at some sites, we might have a surprise somewhere. But invariably, we know that it's clear because we've done transactions there and the search is checked out. so we can have a better sense of how long it's going to take. But I normally give it 2 to 3 months in total, because we're doing the checks on the individual and doing the checks on the property, and we don't control the entire process. It takes a bit more time for a self-employed applicant.
Yes,
because,
I've seen that.
Yes,
as well.
Because self-employed, it depends on the kind of documentation they give us.
That's true.
Do they have their financials in order? Do the financials and the bank statements speak to each other? Sometimes you look at the financials and you see some very low numbers, and then you look at the bank statements and you see a very viable business. And the question is, well, what's happening here? Then credit might come back and say, well, we don't understand this. Go back to the client for clarification. So there's a lot of that going on to establish income. Don't forget, we're a bank. If we don't lend money, we don't make money. So it's in our interest to lend the money.
That's true.
However, we don't want to lend you more than you can comfortably borrow, because then that becomes a problem for us later on. So we're trying to gauge how much your income is, and the more clear the information is, the more likely we are to get the right answer.
Sure.
Yeah.
Okay, so from what you've seen, let's say over the past 2 quarters, would you say is a comfortable percentage that the bank is still willing to cover is 70%?
Of the value of the property?
Yes.
Or we go up to 80.
Okay.
We can go up to 80, and in some cases, as I explained earlier, we can do 100%.
True. Okay.
But the 100% means you are borrowing more, which means your income should qualify you for it.
Yeah.
So you as an individual need to understand how much you earn and how much you can comfortably use to service your loan every month. Because we're on the same side here. I mean, it's not like we want to set you up to default,
right?
Right? We want to make sure that you service the property comfortably for the many years you've taken it for and pay it off without incident. So that's what we're about. We want to make sure that we don't give you the wrong amount.
Great.
We don't give you overdose, right?
Good. All right. So this session is supposed to be very interactive. So let me just check out some of our platforms and make sure we share some questions from our viewers. So give me a second. But while I'm taking a look at that, can you tell me right now what you're seeing? What's the percentage of mortgages that you're dispersing? Let's say on a monthly basis, percentage from the diaspora versus Ghana?
In the past, the split had been 20-80 in favor of resident. Okay. So if we had 100 people in the book, 80 would be based in Ghana, 20 outside. First 3 quarters
80-20, so 80% here in Ghana.
Yeah, exactly.
Okay.
Definitely local business here, definitely. Contrary to public perception.
Exactly.
Yeah. And the 80% in Ghana are not the high net worth multimillionaires that people think. They're regular everyday Ghanaians, right? So again, there are many misconceptions out there.
That's
many,
right.
many
That's actually really surprising statistics right there.
Yeah.
Okay.
So definitely, but in the past 3 quarters, we've seen a slight shift. So it's now 60-40. Okay. 60 resident, 40 non-resident. We've seen some big transactions coming from offshore applicants. But generally, if I had to strike an average, I'll say 70-30.
Okay.
In favor of the resident Ghanaian. It's been consistently like that from day one, yeah.
Huh. Okay.
Yeah.
Very insightful. Yeah. All right. So I have a slew of questions for you. I hope you're ready.
Absolutely. Ready to go.
All right. So this question comes in from Eric Achampong and also Rupa. It says, considering the unstable inflation rate, is it your view that the right time to invest in immovable property? Is it in your view that now is the right time to invest in immovable property?
That's a good question. My answer would be yes, for the simple reason that there's never a right time. I mean, when we started the business, the exchange rate was 1-to-1, and it's gone from 1-to-1.
1-to-1.
Yeah, 1 cedi. In fact, it was 0.9 to the dollar.
Huh?
The earliest transactions we did were less than cedi to. Yeah,
Very shocking.
2006. Less than. Yeah, so we've seen it go from there to parity, 1-to-1. Then I remember very clearly when it went from 1 to 1.2 to 1, and at the time people were really nervous.
Sure.
It had shifted from 1 cedi to $1 to 1 cedi 20. So that seemed like the end of the world.
Oh my goodness.
We saw it go from there to 2, from 2 to 4 to 5, and here we are. I mean, at this rate, who knows where we're going? Yeah. So if you sat there back then expecting things to stabilize before you buy property, you'll probably still be waiting.
So
there's no right time. the question of buying the right property and something you can afford. Don't overstretch yourself. People tend to do that. If I may, it tends to come from the diaspora. Okay. You know, everybody wants to have a big old house back home.
Very affordable.
Don't do that.
Grab a couple.
Don't do that. It's not necessary. If you're not going to live in it, just buy what you need. Sure. And don't overstretch yourself. Sure. And you'll be fine. But to wait for things to stabilize, you might be waiting for a while.
Okay. I'll also add on to this answer, because from what I've seen over the past couple of years is that real estate in Ghana is always a great time. And you can add on to this to make sure that I'm saying the right thing. But year on year, the value appreciation is incredible. Yeah. And the IndigoHomes story is actually a really good one as well. Because I think when we first started and we first broke ground, we were selling, off-plan, early bird for, like, a 2-bedroom was going for about 89,000. Yeah. Right now, it's about 174,000. So the value appreciation story is quite incredible. Yeah. And why not, use this as a great investment tool, and it's year on year. Yeah,
and there's a very simple reason for this. I know there are people online probably doubting what we're saying, but I can give 2 simple statistics. I'm old enough to remember when the population of Ghana was 10 million. Every school kid knew this. Yeah. It's now 30. The population is growing like this. It's a trajectory, exponential. When I went to university, KNUST, the population of the university was around 4,000. It's now almost 10 times that, right? So that tells you that on that trajectory, population is going to keep going unless something really dramatic happens. Sure. So the demand is always going to be there. And out of that demand, the prices. So that's why there seems to be some support to the price. And ever since we started, people have always said properties in Ghana are overvalued. There's going to be a major crash. It's hard to have a crash when there's demand.
We actually hear
that. There's real demand there, and it's not going away. It's real demand. As I said, most of our clients are based in Ghana. So even the Ghana demand alone provides the support. Offshore demand on top of that, investors provide a third layer. So the demand is real, it's tangible, it's not speculation. Exactly. It's people really buying their homes. So to the extent that you're buying a real home to live in, I mean, I struggle to see what could go wrong with that picture. So the demand is coming from the growing population, which cannot be said for most economies. I mean, if you look at the West, you look at Japan, they're struggling with population growth. So that's why they have more, volatile property markets. But in our case, every year you have, a couple of 100,000 new graduates coming out. In 3-4 years, they are your home buyers.
That's right. No, that's right. I see a lot of people coming in and, they see some of the prices and they're jittery. And I'm like, listen, just do it. Even in 6 months, the value appreciation is incredible. Yeah. So, yes, now is the right time. All right, thank you so much for those questions. Okay, we'll move on to a question from Richard Obeng. How long is the mortgage terms?
We can go out 20 years.
Okay.
So we give you 20 years. You don't have to be around 20 years. You can pay off. In fact, most people pay off within 6-7 years, right? We would wish they stayed longer. Yeah. We enjoy their company. But within 5-6 years, 7 years, they are gone. Okay. But we still give you 20, or we give you 15. If there's a cap, it's because you might be approaching retirement. So we wouldn't give you a loan that takes you into retirement. Okay. But otherwise, we give you the full tenor, 15, 20 years. Some people have a problem with that because they say it's too long. And my advice is take it. If you don't want to pay for that period, prepay. Exactly. Right? As opposed to shortening the tenor to start with and then struggling to make the payments. Yeah.
True. Okay, great. All right, so next question is from Nene. She says, tell us a little bit more about the 100% mortgage. Nene is actually a medical doctor.
Right, so 100% mortgage says you don't have to make any down payment, you borrow the full amount. There is a T&C in there. Terms and condition is that there's an insurance policy that you have to take alongside the loan. Okay. And that insurance policy is the one that steps in on your behalf in the case of a default. So you take that for the first 3-4 years, and then you're good to go. If they contact you or contact us later, we can give them full details. But the broad description is that no deposit required.
So listen, we're going to share all the details of how, of course, to reach us and how to reach Koja's department. So we'll make sure that also all of these questions are available as well. We'll go ahead and spend time to also go back to the platforms and respond to all of this. All right. So next question is from Francis. What is equity release?
So equity release, for me, that's my favorite product. It's the most exciting product. And essentially, it says that it's the product that a homeowner uses to raise long-term funding. And because often you hear people say things such as, in Ghana, you can't get long-term money.
Yes.
It's not true. They haven't looked hard enough. You can, if you own property.
Right.
Well, if you don't own property, then probably you can't find long-term money. But if you're a homeowner, you bring your property to us, and you can use it to raise 15-year money. So, for example, if you run a business and you're looking for long-term money to buy a generator or to support the business, or maybe even buy some land or do some extension to the business, to the extent that you own property, you can use it as collateral to raise a mortgage, right? So
Okay,
it's almost
so
the opposite of a purchase. In the purchase, you start off without
So what
property and end
happens
up
if I start defaulting and I've given you my house as collateral? What happens?
Okay, that's the
That's
question.
my
which-
only home, you know.
That's the question which I'm sure is in there somewhere.
I'm sure. Okay, let's
What happens if you default? First off, the default numbers have historically been very low. I mean, they've always been single digits. So more often than not, 92, 93% of the book is always performing. Occasionally people go through a bit of stress, then they are back online.
Okay.
But at no point have we had 20, 30% default, right? So again, contrary to public opinion,
Yeah, that's true.
it never gets there, right? So, and I always say that if you were taking a test and they told you the pass rate is 93, 94%, you'd fancy your chances, right? Because you think, well, this must be easy if 93% of the people are doing it.
Yeah.
So I wouldn't focus so much on default. But when you do default, if it does happen, usually there's a bit of a period to get there. You know, you have to go into delinquency. Then if you're still struggling, then we kind of engage to find out what's going on.
Yeah.
But if we rarely get into the foreclosure process, then yes, we go to court, we get a judicial foreclosure, which means the court settles the matter, they tell us what we can do, and normally it ends up in the house being auctioned. And we get our loan, how much you owe us, the loan balance back.
Okay.
And if there's a difference, that comes to you, the homeowner.
Okay. But, like Kojo said, we are financial advisors here. So, you know, we're there throughout the journey. You know, when you get to this point, you communicate with us and we avoid this, right?
Yeah, absolutely. Yeah.
Okay, good. All right. So let's move on. I'm very conscious of time. I have a lot of questions. So let's try to get through more. Okay, so Fabian says, how much is the 2-bedroom? Okay, so I guess that's to IndigoHomes. So we are currently selling OyarifaPark, which is the second development, and our 2-bedroom unit starts off from $174,000. But as I mentioned, if you have cash up front, we give you quite a bit of a nice discount, and then we have a mortgage price as well. So please visit our website. We have everything on there. If you also respond in the comment section, I will also share a lot more details after this. All right, so Martin says, how long on average does your mortgage take to repay? I think you answered that.
Yes.
Okay. All right, so Rupa has come back and said, regarding the denying of a loan on the basis of existing litigation, what effect does it have on the loan if litigation begins after loan has already been provided?
Well, that's an interesting one. I mean, normally, it's hard to see a scenario that's being portrayed here, because normally we'll do the searches and confirm who owns the land and make sure the person who owns the land is the person selling the property. If somebody challenges their title, usually 9.5 times out of 10, it ends up in what is called atonement. And that cuts across right from government land to stool land. You know, if I buy property from you and you got it from X, and at some point somebody's challenging the right of X to have sold it to you in the first place, well, they've sold it to you, you've sold it to me, I have title. If that title is being challenged, then I might be invited to atone tenancy to the new person. Why? Which means Y is now my new head lessor.
Sure.
So when it comes to lease renewals and any other such ground rent payments, it's no longer going to X, because the courts of the land have determined Y should actually be the owner. So there's a whole process around that. Again, very, very, very blue moon.
Sure.
Doesn't happen as often as people might think.
Sure.
Yeah. When it does, atonement is normally the way out.
All right, thank you so much. This is, I'm learning a lot myself. I'll continue to ask you questions
Absolutely.
too. All right, so Abena Yaboa says, thank you so much for such insightful tuition. May I please ask which category of staff salary range qualifies for your home mortgage?
Another question I try to avoid, not because I don't have the answer, but the real answer is it depends. It depends what property they are buying.
Yeah.
The rule of thumb is usually the city equivalent of about $1,000 does it. So in today's market, you're talking about 10,000 cedis. Even though, if you're not buying a house, if you're not buying IndigoHomes, if you're buying like a half plot, for some people, that's their entry level. I mean, we didn't talk about the property ladder in general, but we can have a chat around that. It depends where you are getting on the property ladder. For some people, it's IndigoHomes. For some people on slightly lower income, it's a half plot on a serviced land somewhere, selling for 20, 30K.
Sure.
And that lowers the threshold, how much you need to earn to qualify. So if she reaches out to the team, they can share a few ideas, establish how much she earns, and then how much she qualifies for. Again, we offer the joint application approach. And that means if she's married, she can apply with a spouse, or she can apply with a sibling, right? Better to have half a house than not no house at all. So, so it depends what the circumstances are.
Okay.
So that's why I started off by saying advice, I think, is the best thing we offer.
Yes.
Yeah, because normally you find if you look hard enough, there's a solution for you out there somewhere.
Okay, good. Yes, so Abena there, like he mentioned, you know, the Ghana market has so many different varieties of options and pricing, but IndigoHomes is the best place to
Absolutely,
go.
yeah.
We offer quality, affordable homes.
Yep.
Okay, let's move on to a question from Barb. How does the credit process in the U.S. compare to that of Ghana?
It's strikingly similar. I mean, because we modeled the business on what happens, on best practice. I mean, there was a company called SA Home Loans in SA, but that's where the idea originally came from.
Okay.
We kind of looked at their template and did as much copying as we could. Because you always copy from the best,
we need to have you back on here to tell us a lot more about that.
Absolutely. So it's best practice. I mean, they're pretty much standard processes. Anybody who goes through our process will find it strikingly similar to whatever they've been through elsewhere. As I said, the only difference is because you use solicitors, a lot of the stuff happens in the background, so you're shielded from a lot of those steps. But otherwise, it's pretty much the same, yeah.
Okay, good. All right, so Dr. Shalian is saying, how long is your binding offer good for? Like the time to complete the transaction, how long?
Yeah.
Okay.
So usually we give a year.
Okay.
So when you get an offer, it's valid for a year. So unless there are material adverse changes in your circumstances, it's binding. So for example, if you apply in September 2022, you have an offer that binds till 2023 September. Now, if in January you decide to quit your job to become a scuba diver.
We were actually just talking about this.
Right.
Okay.
Then you're no longer in the job you said you were, and your circumstances have changed. Your income has gone from 100 to 0 because you've chosen scuba diving as a pastime. We need to know that because then that affects the offer we gave you. So normally, when it comes to pre-disbursement, we do another check.
A whole check.
Yeah, it's a cursory check, but we want to make sure you are the same person who came to us a few months ago.
Okay. Very, very insightful once again. And for us, you know, I think we've talked about this. We had a session with your department yesterday just talking about some of the pre-qualifications and the offer letters and sometimes how after the year, you know, what you're willing to disperse changes as well. So yes, they do a check at the beginning and another check towards the delivery of the property. So what we've also realized is that, you know, when you come in looking for a mortgage option, we're going to offer you more of the ready-built units, which we have here available at IndigoHomes, so that, you know, when you qualify, nothing really changes over the maybe 3 month or 6-month period, and you don't have to go through it all again. So yes, reach out to us. We have ready-built units available for you to look at as well. All right, so next question. I have a good business that is generating good income and I can afford 50% down. Can I qualify for a mortgage if I can satisfy, if if I can satisfy you, how can I finish the rest of the payment?
Right. So, from the way I understand the question, there's 50%. If the house is being sold for 100, he has 50%
down,
and he's going to borrow the remaining 50. So we would assess him for 50 and give him a repayment schedule for the remaining 50,000.
Okay.
If I may, on the products, I left out one, which I rarely have to speak about, because there's one called Save to Own, right? And it normally comes from the self-employed. So for the self-employed, usually some self-employed applicants struggle to demonstrate their income because of the nature of the work and how they keep their paperwork and everything, right? So we can give them a Save to Own product, which means they are given, say, 12 months to demonstrate to us that they can service a loan that has the same repayment amounts as the monthly installments. So if you're going to borrow an amount which means you have to pay us $500 a month, we ask you to make $500 a month payments into an account. And at the end of that period,
so they have to show for a year before you disperse.
Yeah, exactly.
Okay, yeah. No, we actually have had, for IndigoHomes, we've had a few cases like that.
Yeah.
And especially, this is an option that the bank would look at, especially for like business owners, you know, that don't really have too many, you know, things that they can verify your history for. So, yes, that's a very, very good option list. So there's a lot of different options for people.
Yeah.
So now is the time to really look into some of these things.
Excellent.
And we're available to share the various options that we have. All right, so question from Sam Sapa. What about a retiree who wants to put down 50 to 60% of the property value? Can the bank finance the remaining 50 to 40%? And let's also talk about the age.
Right. So usually, as I said, the loan repayment, we try to ensure that the repayment doesn't straddle into the pension years, because we don't want you using your pension to service the loan. Now, there are some exceptions to this, right? There are some exceptions to this because we found that there are certain jobs that people retire from very early. The U.S. Army, for example. Sure. We've had U.S. Army veterans who retired 40 years and still have a good life ahead of them. And they retire on a fairly decent pension, so which are almost like salaries. So that counts. Okay. But if it's a regular pension, then that becomes a bit of a problem.
But it's 40% they're asking for.
Yes,
how can it be if you are telling people that you are willing to give 20 years, you know, how can that be a problem? It's 40%.
It's the principle. So we tend to, we offer what is called prudent lending. We don't do anything that could put our clients at risk. Yeah. So if we sense that lending to you will constitute a risk because you've retired, that we wouldn't go down that route. Yeah. Having said that, I'll still encourage him to submit an application or at least discuss his situation. There might be an angle there which allows us to consider the application. Sure. But the general rule of thumb is that if you have someone who's retired, about to retire, we tend not to proceed.
But they can also, like you mentioned, the joint applicant option. I've seen people thinking of joining in with their child.
Yes, again, so that application will also go through a credit review to see who is really servicing the loan. Right. So the question is, like, who's really on the hook for this? So it becomes a bit of a credit conversation, and we need to understand where the risk is and take a view. So by exception, we could consider, but generally we try to not to lend to retirees.
Okay. Yeah. So I have a question from Nicholas, and he's asking, is the mortgage rate adjustable or fixed? If yes, when does it arise, and can the rate go low?
So it is adjustable, it's variable. So it moves up and down with movements in our base rate. So when it goes up, it goes up. When it comes down, it comes down. I mean, right now, globally, rates are kind of trending upwards. So we're having these conversations with our clients. But yes, they are variable. Okay. We used to offer fixed rate, but we don't offer them at the moment.
And when did that change?
2020.
Okay.
Yeah, 2020.
COVID time.
Yeah, COVID time and other factors led to that. That was a dedicated line of funding that we used to offer that product. We don't have it anymore, but we might bring it back in the near future.
Okay, good. All right, so let's talk about interest. Right now, what base rate are you offering? We didn't talk much about that.
Yeah. So the base rate right now, the CD rate is GRR linked. So GRR is Ghana reference rate. And usually, depending on your credit circumstances, you're somewhere between GRR plus 5 or 6%. GRR moves all the time, so I wouldn't even hazard a guess where it will be when our listeners come in. The dollar rate is, the base rate is 13.3.
Okay.
But we are offering, we've extended the YOHO discount. YOHO is the year of home ownership. We ran that campaign in 2021.
Okay, year of home ownership.
Yeah.
Okay.
So we declared 2021 year of home ownership.
Okay.
So YOHO for short. And we ran a campaign which had a discount of up to 1.5%. And we've rolled that into 2022. So if you apply this year, it was so successful last year, we've extended it. So you start off at 13.3, we add a credit margin, but then you get a 1.5 discount.
Okay.
Just because.
No, that rate is not so bad. That's actually.
Well, no, you end up with a manageable rate.
Exactly.
Yeah.
All right, so we are actually just got 5 minutes left.
Okay.
But I think these points have been, very, very insightful to everybody. And I just wanted to say thank you very much for coming out here. And like I said, the synergy between this collaboration, that we're here to offer all these options and just tell you that there are multiple options of how to get a home. The time is now. Whether you have one already, you can diversify your portfolio. The investment option in Ghana, like we said, we've been in the game for a while. So what he's saying and what I'm saying, this is all verifiable. The Ghana real estate market is growing, value appreciation year on year. So we're here. You can reach out to Kojo. I'll share his details in the comment section. I will respond as much as I can to everybody. You can inbox us. You can like, comment, share our pages as well. And definitely you can reach out to First National Bank. They are great with support. And like Kojo said, co-founder of Ghana Home Loans, he's got a lot of years behind him and a lot of experience and a lot of expertise from all around the world. So we're here to be your partners. Reach out to us. IndigoHomes offers a lot of great properties. And what we wanted to do, what we set out to do in Ghana is actually offer affordable homes, moderately priced, good quality homes that surround a common park area, a lot of greens, a clubhouse, a sports court, a playground, just everything that the resident needs in a gated community, and to make this affordable. So now that Kojo has shared all of this information, you can come reach out to us. They can also offer you other options, many other options. So any closing remarks that you'd like to share? Just anything else you'd like to...
Well, first, I'd like to say thank you for arranging this afternoon.
It's been a pleasure having you.
The same, it's been really enjoyable joining you here. If any of your viewers or listeners haven't visited your sites, they really should. They can see the pictures rolling in the background, but the pictures don't do justice to what they see when they come on site. Really lovely job done, so congratulations.
Thank you.
And I think we said it before. When it comes to real estate, there really is no right time. You could wait and wait and wait, and
you'll be waiting.
and everybody in Ghana has a story about some land or property that they first saw.
We didn't talk about
X
that.
And now it's 5X or something.
We didn't talk about that.
Everybody has that story. I have a couple I could share myself. So there's no right time. There's no right time. You just jump in and just do it.
Yeah, do your research. Kojo's been around. I've been around. Our brand is solid, and you can't go wrong. So thank you so much for coming. Thank you so much for joining us. And the feedback and some of the questions has been great. So it's insightful that it's a good time to maybe start this as a series. Share what you guys would like to learn more about. Whether you're in the UK, whether you're in the US, you're looking to really maybe move over or just diversify your portfolio here. Share with us what you'd like to know. We're not trying to sell all these. We are trying to sell. But we're here again to be your help on this journey. So please, inbox us. What would you like to hear about next? Maybe we'll have him back to delve more into, some of the horror stories that are out there and, the challenges. And we're really looking to tackle and answer and address all of those questions. Thank you so much.
Can I put the website address?
Yes, please.
So it's firstnationalbank.com.gh. And your listeners can also visit the group, First Rank Group, because people are now getting to know the brand.
Sure.
And when they visit, they'll see the sheer might of the platform. I mean, this conversation has been about home loans, but if you visit the website, you see the institution you're dealing with. It's by far and away one of the giants on the continent. And when they visit First Rank Group in SA, they'll see the amazing range of businesses that come under the brand, and they'll understand the power that drives the business we've just been talking about.
Wonderful. Thank you so much. Yeah. Everybody, it's been a pleasure. Thank you so much for joining us. Thank you for making this very interactive. We really look forward to hearing from you and answering all of your questions. We're still there. Comment and let us know what more you'd like to hear. Thank you for joining us.
Thank you.
Bye.